I'm Steve Cheetham from Fidelio Partners with some thoughts on investors and environmental, social and governance factors, that's ESG for short. It used to be that these were not even near the top of investors' list of concerns. Familiar responses included, we don't take care as long as we make money, governance doesn't really matter, or if we don't like the business, we won't own the stock. So what's changed? Three things. First, the attitude of society has changed since the financial crisis. There is more mistrust of business, as well as an expectation that business should adopt a more responsible attitude to a range of stakeholders. So far, the COVID-19 crisis has only reinforced this. In addition, as the reality of climate change becomes ever more apparent, there's an expectation that business should play a role in solving the problem. Second, the investment business itself has become more retail-focused. Instead of large defined benefit pension schemes run by trustees and consultants on behalf of a large group of beneficiaries, we have defined contribution schemes where individuals have to make choices about where they put their money. Increasingly, they're choosing ethical or other funds that aim to make wise long-term choices and include ESG in their decision-making. Thirdly, passive investing has become a huge growth business as active managers, including many hedge funds, have continued to disappoint. For low-cost passive funds, which mimic a given stock market index, there's no choice of which stock you own. This, combined with the retail thing, has substantially increased the resources that fund managers expend on analysis and engagement with companies. So what does that mean for companies and their boards? Their ESG footprint and performance, especially their stance on climate change, has moved from the small print at the end of the annual report to come centre stage. And increasingly, investors are demanding more than just a few paragraphs of warm words. Disclosure of meaningful numbers and plans to move these KPIs in the right direction are expected. Company boards are under increasing pressure to set ESG targets and report on progress every year. Those who don't may well struggle with access to capital. If you'd like to know some more about how Fidelio's ESG advisory services can help your company with adapting to a rapidly shifting world, do get in touch.